Hello and welcome to Indian Markets Unveiled, a daily market podcast where we decode the financial markets and all that's buzzing in the world of stock markets. Here we discuss the long and short of key things that one needs to look into for the trading session. Let us begin by understanding how are the global market cues placed this morning. Of course, just like domestic market triggers, the earnings season has kick-started for global markets, the US market too, and the impact of the same is being seen in the markets there as well. The US futures traded flat after cash market ended in green on Monday. However, if we have a look at the closing, the US markets were higher. The Dow, S&P and Nasdaq did see an uptrend, wherein the Dow and S&P did see an uptick of around 1%. The Dow Jones increased by more than 300 points, the S&P 500 index increased by around 50 points and the Nasdaq, a technology-heavy index, increased by more than 150 points during the session, and while closing, it was a positive closing as well. So clearly there are signs of optimism around the Q3 earnings. The US 10-year yield rises above 4.7% ahead of key economic data and Fed officials' speech. US President Joe Biden is planning to visit Israel on Wednesday and then to Jordan. So this is another economic indicative action and event which one needs to consider. European markets, if we have a look at the Monday afternoon closing, it ended in green with key indices rising up during the session. Again, if we have a look at the energy pack, the oil has steadied on hopes of Venezuela sanctions being eased. To be particular, the Brent crude is trading below $90 a barrel. Along with Brent crude in energy pack, the natural gas is also trading with a 0.5% or more downtrend. Talking about the bullion market, gold slipped but holded the $19,000 pivot on Israel-Hamas conflict. To be specific, gold prices did hold about $1,915 on rising treasury yields and dollar softens to 106. Again, Asian markets opened largely higher with Hong Kong Nikkei up around 1% each. And lastly, if we have a look at the Gift Nifty indicates a start in green for the Indian market as we see around 0.5% or more increase in Gift Nifty in the opening hours. So all in all, the global sentiments look quite comfortable as the US markets did close in green. Positivity signs were seen over there. The European markets also ended with positive signs. The Asian markets have started with a positive note, along with the Gift Nifty also starting on green signs. So this is how the global market trend looks like. Let us now take a look at how the market sentiments looked like in the yesterday's session while the market closed, and then take a cue that how one should approach the market for today's session. Well, the market consolidated in a narrow range throughout the session before ending with moderate losses and also remained within the previous day's trading range on 16th of October. Considering the levels, it is clear now that for Nifty 50, 19,700 will act as a support level followed by 19,600, whereas on the higher side, 19,800 to 19,850 will remain a key resistance area for further upside going ahead. One needs to consider that the market may be awaiting the speech by the Federal Reserve Chair Jerome Powell later this week, and this is a very big important trigger one needs to consider as an economic indicative action. Talking about Sensex, the BSE Sensex fell around 120 points to end at 66,167 level, while the Nifty 50 also declined and closed at around 19,732 level, indicating the indecisiveness amongst bulls and bears about the future market trend. However, if we talk about the broader market outperformed the benchmark as the Nifty mid-cap and small-cap indices gained during the session, while the India VIX, which measures the expected volatility for next 30 days in the Nifty 50, jumped by 5% to 11 levels. Let us now take a look at what are the key support and resistance levels for both Nifty and Bank Nifty. Starting with Nifty may be taking support at 19,700 level, followed by 19,680 and 19,645. So clearly one needs to keep an eye on the levels 19,650 to 19,700 on the support side. If we talk about the resistance level on the higher side, 19,769 can be an immediate resistance, followed by 19,790 and 19,824. Considering the closing of the Bank Nifty on 16th October, when the markets closed, the Bank Nifty also remained in consolidation mode before ending the session marginally lower by around 62 points at 44,226 level, while taking the support at 44,000, which mark on an intraday basis. The Bank Nifty remained sideways as market participants stayed on the sidelines ahead of the scheduled Fed Chairman Jerome Powell's speech later this week. It is clearly visible that in the near term, weakness may persist in the banking sector as the index has stayed below the critical short-term moving average levels. On a short-term basis, there are chances that Bank Nifty might maintain a negative to sideways trend as long as it remains below 44,700. The support is situated at 44,000 to 43,800 levels. As the results season has kick-started, let us now take a look at the key results which will be coming in the trading session on 17th of October. Bajaj Finance, L&T Technology Services, Canfin Homes, Happiest Mind Technologies, ICICI Prudential, Tata Elxsi, Tata Metaliks are the numbers which we will see during the session today. Not only that, IIFL Securities, CIE Automotive India, Himadri Speciality Chemicals, Newgen Software Technologies, Philips Carbon Black Limited, PCBL, Syngene International, TCI Express, Zensar Technologies are all the numbers which will be posted in the session today. So, a long list of results which is coming in. So, one can say that it's a result heavy day. Well, it was a result-heavy day today as well as the banking giant, India's largest private sector lender, HDFC Bank, posted its numbers. Let's quickly take a look at the stocks and news, which has stock-specific news along with the results which came in during the market and results which one needs to have a look at. HDFC Bank, the results came in and India's largest private sector lender has recorded a standalone profit at 15,976 crore for the quarter ended September 24. Up around 50% on a year-on-year basis, beating analyst estimates. The net interest income grew by 30% at 27,385 crore, with a core net interest margin at 3.65% and a reported net interest margin at 3.4% for the quarter. Numbers are not comparable on a year-on-year basis as well as quarter-on-quarter basis due to the merger, which was an event we did witness. Gross advance and total deposit increased by around 1.1 lakh crore on a year-on-year basis to 23.54 lakh crore and 21.72 lakh crore respectively. So a positive set of number coming in from HDFC Bank. The next one in the list is ICICI Securities. The company reported healthy numbers for the quarter ended September FY24 with profit growing around 41% on year to 423 crore and revenue increasing around precisely 46% at 1,249 crore compared to the year ago period. On the operating front, EBITDA grew by 55% on a year-on-year basis to 810 crore with margins expanding around 390 bps to 64% for the quarter. The firm has approved an interim dividend of 12 rupees per share. Coming on to next, JM Financial Services. The financial services company has registered healthy growth for the quarter ended September FY24 with profit rising around 101% quarter-on-quarter to 668 crore and revenue from operating margins growing at 47% on a quarter-on-quarter basis at 608 crore. Meanwhile, the board has appointed A.R. Ganesha as Group Chief Technology Officer of the company with effect from 16th of October. The next on the list is CEAT. The tire company recorded consolidated profit at 208 crore for the quarter ended September FY24, increasing significantly compared to 7.8 crore in the same period last year. So on a year-on-year basis, the numbers are quite significant and quite positive, supported by healthy operating numbers with a fall in input cost. In Q2 FY23, profit was also impacted by the exceptional loss of 23 crore. Revenue from operations grew by 5.5% on a year-on-year basis to 3,053 crore for the quarter. So when the markets open in, the tire company will clearly be in focus, and along with the tire, one should also keep an eye on the auto ancillary and tire stocks particularly. The next in the list is Cyient DLM. The electronic manufacturing services and solutions company has reported a massive 106% year-on-year growth in profit at 14 crore for the quarter ended September FY24, driven by other income and top line. Revenue from operations surged around 72% on a year-on-year basis at 292 crore for the quarter. KEC International is another stock which is in news, and the news is on the order win. The RPG Group company has secured new orders worth 1,315 crores across its various businesses, including transmission and distribution projects in India, the Middle East, Australia, and the Americas. And last but not the least, Tata Power is also a stock which one needs to consider in the session today, as the company's subsidiary Tata Power Renewable Energy has signed a power delivery agreement with auto component manufacturer Endurance Technologies through a special purpose vehicle PP Green Nature for the development of 12.5 megawatt AC captive solar plant. So clearly it was a result heavy day, and all of the results majorly one can say did post good numbers and an impact will be seen. These are the numbers which came in after the market hours on the 16th of October. One needs to consider HDFC Bank, ICICI Securities, Geo Financial Services, Cyient DLM and CEAT. Consider CEAT and Cyient DLM as the numbers are quite positive, and there will be an impact on the tire major and the electronic manufacturing services and solution provider company. Let us now quickly take a look at the FIs and DIs data. Well, foreign institutional investors sold shares worth Rs 593 crores, while domestic institutional investors bought shares worth Rs 1,184 crore on October 16th. So as we see, the FIs are selling shares in the domestic market and the DIs are constantly supporting the markets. So all in all, the markets are quite volatile, and as we see, the results season has kicked in completely, and there are a lot of numbers, be it cash, F&O and Nifty, all the important numbers coming in, and after the numbers, the company's stocks also reacting on the basis of the numbers. One needs to consider that there will be volatility in the markets due to the global and the domestic factors, triggers, scenarios and events along with economic indicative action. But yes, the results season has kick-started, and there will be an impact of all the results in the market and spaces in particular. With this, we come to the wrap of Indian markets unveiled for today's session. As we see, irrespective of market conditions, research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Dev & Choksi have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and that's it. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on the wealth building adventure together. Thank you and have a nice day.